What are stocks? Imagine a big, delicious pizza. You can't eat the whole thing at once, right? So you cut it into slices. That's what stocks are. They're like slices of a company. When you buy a stock, you own a tiny piece of that company. Companies sell stocks to raise money. They use this money to grow their business, develop new products, or open new stores. It's like planting a seed and watching it grow into a big tree. Just like pizza slices, stocks have different values. Some companies are like fancy pizza places with long lines. Their stocks are in high demand. Others might be like quiet pizza places. Their stocks might be lower in price. Why should kids learn about stocks? You might be thinking, stocks? That's for grown-ups. But guess what? Learning about stocks is like getting a head start on your financial future. It's never too early to learn about money and how it works. Knowing about stocks can help you make smart choices with your money when you grow up. It's like learning a new language, the language of money. The earlier you start, the better you'll become. Plus, it's exciting. Think of all the amazing companies out there. The ones that make your favorite toys, games, clothes, and even your favorite snacks. When you understand stocks, you understand how these companies grow and become successful. How do stocks work? Let's say you love cookies and you find a company called Super Cookies. They make the best cookies ever. You decide to buy a stock in Super Cookies because you believe in their delicious potential. When Super Cookies does well, their stock price goes up. More people want to buy their stock because everyone loves their cookies. This increase in price means your tiny piece of Super Cookies is now worth more than what you paid for it. But what if Super Cookies doesn't do so well? Maybe they have too many cookies left over. Their stock price might go down because fewer people want to buy their stock. This is the risky part of stocks. Their prices can go up and down. Lemonade stand example. Let's imagine you have a lemonade stand. You're the CEO, that's the boss, and you want to expand your business. You need a new lemonade stand, more lemons, and maybe even some cookies to sell alongside your delicious lemonade. To get the money you need, you decide to sell stock in your lemonade stand to your friends and family. Each share of stock they buy gives them a tiny piece of ownership in your business. Now, if your lemonade stand becomes super popular and you're selling lemonade like crazy, the value of your stock goes up. Your friends and family are happy because their investment is growing. Section 5. Risks and rewards. Just like with any business, there are risks involved with investing in stocks. The price of a stock can go down if the company doesn't perform well or if something unexpected happens in the world. But remember, with risk comes reward. When you invest in stocks, you're participating in the growth of companies and the overall economy. Over the long term, the stock market has historically trended upwards, even with its ups and downs. It's important to remember that investing in stocks is a long-term game. Just like you wouldn't plant a seed and expect a tree to grow overnight, you can't expect to get rich quick by buying and selling stocks frequently. Section 6. Learning about companies. One of the most exciting things about learning about stocks is that it teaches you about different companies and how they work. When you invest in a company, you become a part owner, and it's fun to follow their progress and see how they're innovating and growing. You can learn about companies by reading their annual reports, which are like report cards for businesses. You can also stay updated on company news and announcements by following financial websites and publications. By understanding how companies make money, what products or services they offer, and who their competitors are, you can make more informed decisions about which stocks to invest in. Investing in the stock market is like planting a tree. You choose a small sapling, a stock, that you believe has the potential to grow into a strong and tall tree. You nurture it by holding on to your investment for a long time, allowing it to weather storms and benefit from sunny days. Over time, your small investment can grow significantly. This is because when you invest in stocks, you're not just buying a piece of paper. You're buying a share of the company's future earnings and growth. Remember, investing in the stock market is a marathon, not a sprint. By being patient and staying focused on your long-term goals, you can potentially reap the rewards of compound growth. Compounding is like a superpower when it comes to investing. It's the ability of your money to make more money, and then for that money to make even more money. It's like a snowball rolling down a hill, getting bigger and bigger as it goes. Let's say you invest $100 in a stock, and it earns 10% in the first year. You now have $110. The next year, you earn another 10%, but this time it's calculated on $110, not your original $100. So you earn $11 in interest, bringing your total to $121. The longer you leave your money invested, the more powerful compounding becomes. It's like a magical money tree that keeps on giving. You don't need a lot of money to start investing in the stock market. In fact, you can start with just a small amount of money and gradually increase your investments over time. The most important thing is to start early and develop good financial habits. Talk to your parents or a trusted adult about setting up a custodial account, which allows you to invest under the guidance of an adult until you reach the age of majority. Remember, even small amounts of money invested regularly can add up to a significant sum over time, thanks to the power of compounding. Congratulations! You've just taken your first steps on an exciting journey toward financial literacy. By understanding the basics of the stock market, you're well on your way to making smart financial decisions and building a bright future. Remember, investing in the stock market is just one part of a well-rounded financial plan. It's also important to save money, spend wisely, and avoid debt. As you continue to learn and grow, always be curious, ask questions, and seek guidance from trusted adults. The world of finance is vast and ever-changing, but with knowledge and preparation, you can achieve your financial goals and live a happy and fulfilling life.